Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance bro and registered financial consultant. And this is Real Pros versus Content Creators, where we separate financial entertainment from financial reality. Today, we got to talk about day trading. Now, not trading itself, but the fantasy being sold around it. Because content creators teach you how to trade, while institutions design systems where they don't have to risk losing. So now, ladies and gentlemen, let me ask you something. If day trading was the highest and best way to build wealth, why don't insurance companies managing trillions of dollars do it? Why aren't pension funds staring at candlesticks? Why aren't actuaries talking about pips, dips, and breakout patterns? Because real professionals don't gamble with principle. They engineer outcomes. So content creators show you one screen, flashing charts, buzzwords, emotional wins, rented Lambos, and screenshots of trades. They teach you to believe. You can beat the market if you just learn the strategy. But here's the truth. You're not trading against other beginners. You're trading against high-frequency algorithms, institutional liquidity desks, quantitative hedge funds, and firms executing trades in microseconds. So you're bringing a cell phone app to a supercomputer fight. Now, let me show you what the real pros do, because this is where it gets interesting. So, when money goes into a properly structured index universal life insurance policy, the insurance company does not throw your money into the stock market. Therefore, your principal sits safely inside the insurer's general account. So, that account is filled with boring assets. You're talking things like high-grade corporate bonds, fixed income securities, and conservative institutional investments. Now, why? Well, that's because professionals protect capital first. Now, here comes the genius part. That portfolio generates yield, let's say 4 to 5%. The insurance company takes only the interest and uses that as an options budget. So then they go to Wall Street and they buy call options on an index like the S&P 500. Now, it's not your money, it's the interests. So, if markets go up, the options win, and the gains are credited to your policy within the caps. Now, if the market crashes, well, then the options expire worthless. But your principal remains untouched. Zero loss. So that's what it means when we say you're 0% floor. So, understand what just happened there. The institution is participating in market upside without exposing your actual money to any of the downside risk. That is not trading. That, my friends, is engineering. Now, I want to compare that to the retail day trader. So, a trader risks their actual savings, their emotional energy, taxable gains, and sequence of return risks. So if the market drops 20%, they lose 20% of real money. If they use margin, they can lose more than they started with. Their account balance is the options budget. So why would a client prefer institutional strategy over DIY trading? Well, that's a great question. Let me break it down. The ultimate stop loss would be number one. So day traders pray that their stop loss executes. IUL clients have a contractual 0% floor. So there's no revenge trading. There's no digging out of holes. Every year resets from a high watermark. Let's look at point number two. You have tax shield versus tax drag. So day traders trigger taxes constantly. Short-term gains equal ordinary income tax. That destroys compounding. Now, inside a properly structured policy, you get tax-deferred growth, tax-advantaged access, and policy loans that are structured correctly can be tax-free. so the velocity of money stays intact. Let's look at point 3. You got institutional pricing. So insurance carriers deploy billions of dollars. They buy options at pricing retail investors will never see. So clients piggyback institutional leverage without taking on institutional risk. Let's look at point 4, the self-completing plan. If a trader dies tomorrow, their family inherits whatever remains in the brokerage account, maybe even less after taxes. Now in an IUL, it creates an immediate tax-free death benefit. The plan finishes even if the client doesn't. Point number 5, you got emotional freedom. So day trading is a job. You got stress, screens, anxiety, and addiction cycles. Institutional strategy lets clients focus on things like their career, their family, their business, and most importantly, everyday life. So the money, it works quietly in the background. Now, here is the uncomfortable truth. The goal was never to become the trader. The goal was to own the system that the trader wishes that they had. So content creators generally teach activity. Professionals generally design stability. Wall Street doesn't gamble with principle. So, ladies and gentlemen, why should you? Now, if you're serious about learning how real financial strategies actually work, not just what trends online, reach out. If you're still thinking about it, keep watching the Gurus. Remember, folks, fortune favors the bold. I'll see you in the next episode of Real Pros versus Content Creators. And remember, wipe ass, work in progress every day and see success. Salute.